So, have you ever found yourself maybe scrolling through the news, right? And you see like three different things happen in just a few days. Like maybe a small earthquake somewhere, some really weird weather pattern, and I know a specific stock suddenly dipping. And you get that little feeling, that little voice in your head going, "Huh, is something bigger going on here? Is this like a sign?" Or maybe you're, at a casino watching the roulette wheel and it hits red like 5 times in a row and your gut just screams, okay, black, it has to be black next. The streak can't possibly keep going. But then maybe a few minutes later you kind of step back and realize, nah, it was just random, a pure chance, a coincidence that your brain like instantly tried to stitch into some kind of meaningful story.
Mm.
If any of that sounds familiar, if you've ever felt like you spotted a pattern, a streak or some meaningful connection in something that looking back was totally arbitrary, well, you're definitely not alone. And it's not just some weird quirk our brains have, it's actually a really fundamental way our perception works. And maybe surprisingly, it can often lead us way off track. It's almost like our brains have this built in pattern detector that's a bit overenthusiastic. Sometimes it locks onto signals that just aren't really there, firing at nothing, you could say. So, today we are diving deep into exactly that, this really fascinating trick of the mind. Our mission, for you listening, is to really unpack what this bias is. We'll dig into where it comes from, its roots in psychology, maybe even evolution. We'll look at its surprisingly big impacts in the real world, especially, in areas like investing, making big decisions, even how we see the world. And most importantly, we want to give you the tools, the insights, the strategies to maybe recognize it and guard against it in your own thinking. We've pulled together a whole bunch of research, some really cool case studies to give you a solid but hopefully easy to grasp picture of this thing.
And it's really quite striking when you think about it, just how deeply ingrained this tendency is. This need we have to find order, to impose structure on things, even when what's actually there is just, well, randomness,
Mm.
pure chaos sometimes. Understanding biases like this one, recognizing these sort of default settings in our heads, it's absolutely vital for making better decisions, more objective decisions, especially now with so much information flying around all the time, whether you're looking at market data or thinking about a business move or even just trying to make sense of things you see every day. Knowing this bias exists is really your first line of defense.
Okay, let's peel back the layers then. Let's define this properly. We're talking about the clustering illusion. So, at its heart, the clustering illusion is this cognitive bias where we humans, well, we mistakenly see patterns or meaningful streaks or little groups, clusters in data that's actually completely random or, pseudo random. It's not that clusters can't happen in random data, they absolutely do. Statistically, they have to appear sometimes. The illusion part is how we interpret them. We see a cluster and think, that means something. There's a reason, when often it's just natural variation, just how randomness looks sometimes. It's kind of like looking at a random spray of paint splatters and immediately wanting to draw circles around the bits that look denser. That's a perfect analogy, yeah. The real root cause here is our innate tendency to really underestimate just how much variability, how much clumpiness naturally shows up in small samples of random data. Our brains, like you said, they just crave order. They're hungry for patterns, even when there's nothing but chaos on the menu. We sort of intuitively expect randomness to look, well, even uniformly spread out like dots on a perfect grid, or coin flips perfectly alternating heads, tails, heads, tails, but real randomness, ironically, it often looks quite lumpy. You get surprising clumps and then big empty spaces. It just doesn't match our gut feeling of what random ought to look like.
That difference between what we think random looks like and what it actually looks like, that seems so key. It's like our brains are desperate to connect the dots, even on a totally blank page where there are no real dots to connect. So, expert, how did psychologists or researchers really start to figure this out? Where did the understanding of this clustering illusion come from?
That's a good question. The groundwork was laid over quite some time, actually, with insights popping up from different places. Some of the really early foundational stuff, even though it wasn't called the clustering illusion yet, came from Ellen Langer back in 1975. She did this landmark research on something she called the illusion of control. Langer showed how people consistently overestimate their ability to influence or control events that are, well, fundamentally random or driven by chance. Like, in her studies, people felt more confident if they threw the dice themselves in a game of chance compared to someone else throwing it for them. Or they'd pay more for a lottery ticket if they picked the numbers, even though it makes absolutely no difference to the odds. This deep-seated need for control, for feeling like we're in the driver's seat, it feeds right into the clustering illusion. If we see what looks like a streak, we might start thinking we have some special insight or skill, that lets us predict what's next, even if it's totally random. And that's exactly why in gambling contexts, it often gets called the hot hand fallacy.
Ugh, the hot hand. Yeah, I know that one. The idea that a basketball player who sinks a few shots in a row is suddenly hot and like magically more likely to make the next one, even though each shot is technically independent, that perfectly captures that mistaken belief in a pattern.
Precisely. But the scholars who really brought the clustering illusion itself into sharp, rigorous focus
Yeah.
were the psychologists Daniel Kahneman and Amos Tversky, legends in the field. Their work in the 70s and 80s on cognitive bias and heuristics just fundamentally changed how we understand human judgment. And they argued that the clustering illusion is largely driven by something they called the representativeness heuristic.
The representativeness here is, okay, that term definitely gets thrown around, especially in behavioral economics stuff. Can you break that down for us? Like, how does that lead us to see these fake patterns?
Sure. Think of it as a mental shortcut. A rule of thumb our brain uses to make quick judgments about probability or how likely something is. When we use the representativeness heuristic, we basically assume, instinctively, that a small chunk of data, like a few recent events, a short series of things, is highly representative of the much bigger picture, the whole population, or the underlying process it came from. So if we see something that looks like a non-random pattern, in a small sample, say, stock goes up for 3 days straight, or a coin lands heads 4 times, our brain just leaks. It jumps to the conclusion that the whole process of what's coming next must also have that pattern. We see a tiny streak and assume it's a major trend, even if it's just, statistical noise. It's an intuitive jump, but often a misleading one. And there's another factor, too, which is a bit more subtle, called observational selection bias. This happens when you suddenly start noticing something you didn't really pay attention to before. Maybe you filtered it out. And then you wrongly conclude that this thing is happening more often. It's not that the world changed, it's that your focus changed, like the classic example. You decide you want to buy, say, a bright yellow car. Suddenly, everywhere you look, you see bright yellow cars.
Oh, yeah, I've totally had that happen.
Right? You think, wow, yellow cars are suddenly super popular. There's a whole cluster of them. But the actual number of yellow cars hasn't changed. Your brain's just tuned into them now because they're relevant to you.
Mm-hmm.
So you perceive this illusory cluster, thinking the frequency is shot up when it hasn't.
So it really sounds like our brains are just pattern-finding machines, almost obsessively so. And sometimes that machinery just goes haywire, turning random static into what looks like a clear signal. Why is this pattern-seeking drive so incredibly strong in us? Is it just a psychological thing, or is there something deeper, or maybe evolutionary going on?
Oh, it absolutely has deep evolutionary roots. Detecting patterns was a fundamental survival skill for our ancestors. Absolutely critical. Think about early humans out on the savannah. From a survival perspective, it was much, much better to mistakenly see a pattern that wasn't actually there. Like thinking rustling grass must be a lion.
Right, a false alarm.
Exactly. A false alarm might waste a bit of energy, give you a jolt of adrenaline, but it's usually harmless. But missing a real pattern, failing to spot the subtle signs of a predator nearby, or misreading the signs of a coming storm that could be deadly. So this hypervigilant drive to connect the dots, to anticipate, to find meaning, it's a powerful survival mechanism that got baked into our brains over millennia, even if it sometimes misfires in the modern world.
That makes a ton of sense. It's like our ancient brain is still on high alert, trying to predict everything. And because true randomness feels so chaotic and uncontrollable, our minds kind of hate it. We feel this urge to force some order onto it, some cause and effect, even if it doesn't fit.
Precisely. We crave narratives. We want stories that make sense. Randomness is unsettling because it defies prediction, it defies control. So when we're faced with a bunch of random events, we instinctively start weaving stories, connecting the dots, assigning causes and effects, even if there's no real link. We mistake plain coincidence for some kind of meaningful connection. We see flukes and think it's fate. This deep psychological need for a coherent story often just overrides the objective facts, the statistical probabilities. And this is the very same tendency that makes people, for instance, misread short-term bumps and dips in the stock market as solid, lasting trends, which, as we'll get into, can have really significant consequences.
You know, it's not just inside our heads, is it? These biases, especially the clustering illusion, they show up in the real world in some pretty dramatic ways, affecting big things, like how cities were defended in wartime or maybe even medical diagnoses today. Let's dig into a classic example that really drives this home: the German bombings of London during World War II.
Yes, this is such a powerful case study. It perfectly illustrates the clustering illusion playing out under incredibly high stakes. So, During WWII, Londoners were under constant bombardment from German V-1 flying bombs and later the V-2 rockets. Terrifying, indiscriminate weapons. Naturally, people were desperate to make sense of the chaos, the seemingly random death and destruction, and a strong perception quickly took hold. People became convinced that certain areas, certain neighborhoods, were getting hit much more heavily than others. This led to all sorts of theories. Maybe the Germans were targeting specific factories, or maybe trying to hit working-class areas to demoralize people, or maybe they just had pinpoint accuracy. People saw clusters of bomb hits and assumed there had to be a strategy behind it.
Which sounds totally reasonable, right? If your street gets bombed 3 times and the next street over is fine, you'd absolutely think you were being targeted. It's hard not to see a pattern there.
Exactly. Your personal experience feels incredibly real and meaningful. But here's the fascinating part. Later analysis, like the work by psychologist Thomas Gilovich, who studied this bias extensively, and even earlier statistical work by R.D. Clark back in 1946, they revealed something totally different, something counterintuitive. They meticulously mapped out where the bombs actually landed, and the analysis showed the bombings were, statistically speaking, completely random. The pattern of hits was an incredibly close match to a known random distribution called the Poisson distribution.
Okay, Poisson distribution. What does that mean, basically, for those of us who aren't statisticians?
Think of it simply like this. The Poisson distribution describes how random events clump together in space or time, even when they're truly random and independent. It tells us that even if bombs are falling randomly, you won't get a perfectly even spread. Just by chance, you'll naturally get clusters, areas with lots of hits, and also sparse areas with very few hits.
Ah, so the model itself predicts clustering, even in randomness.
Precisely. It shows that these apparent clusters Londoners were seeing, the targeted zones, they were just the natural expected result of a random process. There was no hidden German strategy determining those specific locations, statistically speaking. The clustering illusion was in full effect, driven by fear and the need for an explanation. It's a stark reminder of how easily we can be misled by apparent patterns, especially when relying on just anecdotes or personal observation.
Wow, that's a really powerful lesson. People were seeing intent where there was only chance. It really makes you wonder, if we connect that to today, how often are we seeing these kinds of patterns in everyday life, in business, in the news, that are really just statistical noise, but we give them so much weight?
Far, far more often than most of us probably realize. And, for anyone involved in finance or thinking about risk and probability, there's another incredibly famous and costly example of this illusion, the Monte Carlo Casino incident back in 1913.
Okay, here's where it gets really interesting, especially if you've ever felt the pull of a streak yourself, maybe in investing or even just playing a game.
Oh, absolutely. Imagine the scene. Monte Carlo, August 1913. Glamorous casino, big crowd around one particular roulette wheel. The croupier spins the wheel. The ball drops. Black. Okay, spins again. Black. Again. Black. This went on, unbelievably, for 26 consecutive spins. The ball landed on black every single time. The odds of that happening. Tiny. Something like 1 in 67 million. Now think about the gamblers watching this unfold. After maybe 5 or 6 blacks, many are probably thinking, okay, red is due. It has to even out. That's the gambler's fallacy kicking in, which we should probably talk more about later. But after 10 blacks, 15, 20, 26 in a row, the belief that red had to be next must have become overwhelming. People were convinced the pattern had to break. They saw this incredibly long streak of black not just as unusual, but as a signal that red was now somehow inevitable.
And I bet they started betting huge amounts on red, thinking they'd crack the code or that the universe owed them one.
That's exactly what happened. People started placing massive bets on red, absolutely convinced the streak couldn't possibly continue. And they lost fortunes. The casino apparently made millions of francs that day, all thanks to this collective cognitive error. The hard lesson here, and it's so relevant for traders, for investors, for anyone making decisions with uncertainty, is that each spin of the wheel is totally independent. The wheel doesn't remember the last spin. It doesn't owe a color. Past random outcomes, no matter how unlikely the streak seems, have zero predictive power over the next outcome. Yes, 26 blacks in a row is incredibly rare, a statistical freak event. But that rarity describes that specific sequence. It doesn't change the odds for the next spin, which were still roughly 50-50. It's just a brutal reminder that our gut feelings about streaks can lead us to make really costly mistakes, abandoning basic probability.
That Monte Carlo story hits hard because you can immediately see the parallel in trading and investing, can't you? Investors are drowning in data all the time. It seems like they'd be especially prone to seeing these illusory clusters.
They are prime candidates, unfortunately. Investors constantly look at charts, price movements, volume data, news feeds, and a lot of that short-term movement can easily look like a meaningful trend when it's just noise. A trader might see a stock go up for, say, 3 or 4 days in a row, just modest gains. But their pattern-seeking brain kicks in and says, aha, winning streak. This is a bullish trend starting. When in reality, it could just be random fluctuation, normal market volatility, statistical noise.
So they latch onto that short-term blip, that mini cluster of green days, and think it's a reliable signal and then make big decisions based on it.
Exactly. This can trigger a whole series of decisions based on these perceived but possibly non-existent trends rather than on, say, the company's underlying fundamentals or a solid long-term strategy. And the results? Well, they could miss out on real opportunities by jumping out too soon. Or they could pile into something right before it reverses, leading to significant losses. Think about specific examples. Someone might see a mutual fund that's had a great couple of quarters, a real outlier performance. They see that cluster of good returns and pour money in, thinking the fund manager is hot.
Right. Ignoring the long-term average.
Precisely. They ignore regression to the mean, which we'll touch on, and then they're surprised when the performance reverts back to average. Or they might see a stock wiggle up for a few days and decide it's a breakout, causing them to buy high, only to see it drop again. They're overreacting to short-term noise as if it's a guaranteed signal about the future. Understanding that past random performance doesn't predict future results is just critical in finance.
But this isn't just about Wall Street, is it? Does this clustering illusion creep into other parts of our lives? More personal stuff.
Oh, definitely. It's woven into the fabric of our daily decision-making in so many ways. Think about healthcare. A doctor, for instance, might see, just by chance, 3 or 4 patients in a week presenting with similar, maybe slightly unusual symptoms at their clinic. Their brain, wired to find patterns, might start thinking, is this a cluster? Is this the start of something new? A local outbreak? This could potentially lead to, misdiagnosis or maybe ordering unnecessary tests or initiating treatments based on a perceived cluster that's really just a statistical coincidence within their patient pool.
Like seeing a couple of rare flu cases close together and thinking it's an epidemic starting when it's just random chance bringing them into the clinic around the same time.
Yeah, exactly that kind of thing. Or something more mundane. Choosing lottery numbers. People do this all the time. They'll look at the numbers that won recently. They see some numbers that seem to be popping up a cluster. So they think those numbers are hot or due to come up again. Or they see numbers that haven't shown up for ages and think those are due.
Guilty as charged, maybe?
We all feel the pull, but they meticulously pick numbers based on these perceived streaks or gaps, totally ignoring the fact that every single lottery draw is independent. Each number has the exact same tiny chance of being picked, regardless of what happened last week or last year.
And think about social implications too. Say you move to a new city. You hear a couple of news reports, maybe see some posts on a neighborhood app about burglaries in one specific area, Borough X. Your brain quickly forms a picture. Borough X seems to be where the crime is clustered. You might start avoiding that area, feel nervous going there, maybe even judge the people who live there. But in reality, the overall crime rate might be pretty evenly or randomly distributed across the whole city. That cluster you perceived was just based on a few salient reports that got your attention. It's an illusion leading to biased judgments and affecting your behavior.
And you mentioned even fields like UX design, where they're supposed to be all about data. How does it sneak in there?
Yeah, even in data-rich fields, it happens. A UX researcher might be looking at how people navigate a new website. They notice, say, 3 users out of 50 who followed the exact same path. Clicked A, then B, then scroll to C, then click D. The researcher's pattern detector might go off. That's the ideal user journey, a cluster of perfect navigation. So they might then redesign the site to funnel everyone down that ABCD path, thinking they're optimizing based on this observed pattern. But what if those 3 users were just a coincidence, a random fluke in a small sample? By optimizing for that illusory cluster, they might actually make the site worse for the other 47 users who navigated differently. Users themselves can also fall for it, maybe clicking on content that seems to be trending or part of a pattern, even if it's not really relevant to them.
It really makes you pause and ask, doesn't it?
Yeah.
How often are you in your work or just daily life making decisions based on apparent clusters that might not be real?
It's genuinely mind-boggling how widespread this is, and it keeps coming back to this idea that our brains are just desperate to create order, to tell a story. So let's dig into that a bit more. Why this relentless drive for order? What else is going on psychologically besides just basic pattern recognition?
Well, Beyond that fundamental pattern-seeking wiring we talked about, there are a few other key psychological mechanisms that really fuel this illusion. One big one is something called post hoc rationalization. This is fascinating. It's what happens after an event or a series of events occurs. We look back and we retroactively build a story. We selectively pick out earlier things, maybe a news item, a comment someone made, a small dip in the data, and we weave them together to make it seem like the final outcome was predictable, even inevitable, like it was all part of a clear pattern leading up to it.
Oh, right. Like, after a project fails, suddenly everyone remembers all the warning signs that supposedly pointed to disaster, even if nobody thought they were significant at the time.
Exactly. You've constructed a pattern after the fact. You've created this narrative of cause and effect that wasn't really there beforehand. You're fitting the past to explain the present, which makes the illusion of a meaningful cluster seem much stronger. And closely related to that is selective memory. Our memories are not perfect recordings. We tend to notice, remember, and retell the things that fit a pattern, especially if it's emotionally charged or confirms something we already believed. The times our perceived pattern held true. We remember those vividly. The times it didn't pan out, the times things were just random. Those memories tend to fade, or we dismiss them as flukes, as noise. We remember the gambler's amazing winning streak, but we forget the countless hours they spent losing or breaking even. This selective recall makes patterns seem way more common and reliable than they actually are.
So what's the takeaway here? It feels like our brains are just working overtime, constantly trying to write a coherent script, a sensible plot, even when the raw data is just, well, random noise. And it sounds like this clustering illusion doesn't work alone, right? It kind of teams up with other biases.
That's a really important point. If you think about the bigger picture of how our minds work, these cognitive shortcuts, these heuristics, they often interact. They can amplify each other. The clustering illusion definitely works in tandem with, and sometimes gets mixed up with, several other common biases. It's like a network of potential pitfalls. We already touched on the gambler's fallacy, especially with the Monte Carlo story. It's easy to confuse them, but they are distinct. Remember, the clustering illusion is about seeing the pattern in the first place, noticing the 26 blacks and thinking, wow, that's a significant streak. The gambler's fallacy is the specific, flawed belief that follows. Thinking that because there were so many blacks, red is now somehow more likely or due to balance things out. It's about misunderstanding the independence of those random events.
Okay, got it. Clustering is seeing the streak. Gambler's fallacy is betting against the streak because you think its time is up. Makes sense. What about confirmation bias? That sounds like a natural partner for the clustering illusion.
Oh, a huge one. Confirmation bias and the clustering illusion are like partners in crime. Confirmation bias is our tendency to actively look for, interpret, and remember information that confirms what we already believe, while ignoring or downplaying anything that contradicts it. So once the clustering illusion makes you think you see a pattern, maybe you believe a certain sector of the market is hot, confirmation bias kicks in. You'll start noticing and remembering all the news articles, analyst reports, and forum posts that agree with your hot sector theory. And any negative news, you'll probably dismiss it, rationalize it away, or just not even register it. This creates a dangerous feedback loop, reinforcing your belief in the initial, possibly illusory pattern. Then you have the availability heuristic. This is where we judge how likely or important something is based on how easily we can recall examples of it. A really dramatic or memorable cluster like that crazy Monte Carlo streak, or maybe a series of plane crashes reported close together, becomes very available in our minds. It sticks out. Because it's so easy to remember, we might mistakenly think it's more common, more significant, or more predictive than it actually is, even if it was just a rare statistical blip.
So if something is really vivid or recent, like a sports team having an amazing, unexpected winning streak that everyone's talking about, that memory becomes super accessible. And we might overestimate how good they actually are overall because that streak is so easy to recall.
Precisely. And don't forget conservatism bias. This is our tendency to cling to our existing beliefs, our initial assessment, even when new evidence comes along that should make us update them. An investor who became convinced, perhaps via the clustering illusion, that a few good earnings reports signaled a long-term boom for a company might stubbornly hold on to their shares, even when subsequent data clearly shows the trend fizzling out or reversing. They're just slow to change their mind once the initial pattern belief is set. And lastly, there's information bias. This is the tendency to seek out more information even when it's irrelevant or doesn't actually help the decision. Sometimes having more information just makes us feel more confident, even if it's mostly noise. Think about constantly checking daily stock prices and reading endless commentary on minor wiggles. It can make traders feel informed, but often just exposes them to more random noise, increasing the chances they'll see illusory short-term patterns and get distracted from their real long-term strategy.
Wow. Okay, this has been incredibly insightful, maybe even a little unsettling, realizing how easily our brains can trick us. But knowledge is power, right? So let's shift gears. Let's talk solutions. This is where we get practical. How can you, listening right now, actually start to defend yourself against this really sneaky, really fundamental bias?
Absolutely. This is the crucial part. And the number one foundational step, honestly, is just awareness and education. Simply knowing that this bias exists, that your brain has this built-in tendency to find patterns everywhere, even in randomness, and that this can lead you astray. That knowledge itself is incredibly powerful. It helps you raise that internal red flag. It gives you permission to pause and ask, hang on, am I seeing a real pattern here, or is this just my brain doing its thing? It really boils down to cultivating critical thinking and improving your statistical literacy. Without that basic awareness, fighting the illusion is almost impossible.
So it starts with questioning that gut reaction, not just automatically trusting the pattern that seems to jump out.
Exactly. Critical thinking and statistical reasoning are your best friends here. You need to actively challenge those perceived patterns, especially the ones that feel really obvious or emotionally compelling. Ask yourself, what's the actual evidence? Is it robust? A really useful technique is to always consult the base rate. Ask, how common is this kind of event or outcome normally? Is what I'm seeing truly exceptional, or is it actually within the bounds of normal, expected random variation? Sometimes a cluster looks dramatic in isolation, but when you compare it to the overall baseline frequency, you realize it's not statistically significant at all. Like seeing a few heads in a row when flipping a coin seems like a pattern, but totally normal within the base rate of 50-50 odds over many flips.
And you mentioned earlier about not jumping to conclusions too fast, giving things time.
Yes, delaying interpretation is huge. We live in a world that rewards quick takes, instant reactions. But with patterns, patience is often key. Don't draw firm conclusions based on a tiny amount of data or a very short time frame. Wait for more information to come in. Patterns that stick around, that persist over longer periods, across more data points, and maybe show up in different related contexts, those are much more likely to be real and meaningful than short-term blips that vanish as quickly as they appeared. And when you're really unsure, especially if the decision matters, break it down numerically. Do the math. Count things. Calculate actual frequencies. Look at probabilities. Morbers have a wonderful way of cutting through our subjective feelings and biases. Just because a series of events feels important or connected doesn't mean it actually is, statistically. You have to consciously work to separate the feeling of meaning from the statistical pattern, or lack thereof. And related to that, getting comfortable with a few basic statistical concepts is incredibly helpful. We mentioned the law of large numbers earlier.
That just reminds us that while small samples can be really wild and show all sorts of weird clusters, as you get more and more data, things tend to average out. The results start looking much closer to the true underlying probability. Random fluctuations get smoothed out.
So more data usually means a clearer, less illusion-prone picture.
Generally, yes. It makes it harder to be fooled by those short-term lumps. And the other big one is regression to the mean.
Right, that sounds important.
It really is. Regression to the mean basically says that if you observe an extreme outcome like a stock having an unbelievably good year, or a student scoring way higher than usual on one test, or that basketball player hitting 10 shots in a row, the next outcome is statistically more likely to be closer to the average, less extreme. The clustering illusion might make us think, wow, this extreme performance is the new normal. It's going to continue. But regression to the mean cautions us that extreme results often involve a chunk of luck, good or bad, that probably won't repeat. Performance tends to snap back towards the average. Understanding this helps you avoid overprojecting temporary streaks, whether they're good or bad. Knowing these concepts helps build that mental filter against false patterns.
Those are really solid thinking tools. What about more concrete strategies, things people can actually do day to day to make better calls, maybe in their job or with investments or just navigating life?
Okay, for practical application, diversifying your information sources is absolutely crucial. Don't just read the one newsletter or follow the analysts who always confirm what you already suspect you're seeing. Actively seek out different viewpoints, contradictory opinions, alternative data interpretations. This is a direct antidote to confirmation bias, which, as we said, loves to team up with the clustering illusion. Getting a wider range of inputs helps you build a much more objective, balanced picture. Another really effective strategy, especially in team settings or professional environments, is collaboration with peers and experts. Talk about what you think you're seeing. Share your perceived patterns. Discuss your potential decisions. Other people with different perspectives, different biases, or maybe just fresh eyes might spot flaws in your logic. They might challenge your pattern or point out something you missed. Or, just as importantly, they might not see the pattern you think is so obvious, which is a huge red flag. This kind of collaborative intelligence, or even informal red teaming, provides a vital reality check against individual bias.
So basically, don't operate in a silo. Use the collective brain power to challenge your own assumptions. And then, I guess, keep learning from experience.
Absolutely. Regular review and adjustment of your strategies is key. Markets change, situations evolve. You need to constantly revisit your approach, your decision-making rules. Don't get stuck defending a strategy based on a pattern you perceived months ago if new data suggests that pattern wasn't real or no longer applies. This links directly to the importance of feedback and reflection. Make it a habit to look back at your past decisions. Where did you get it right? Where did you get it wrong? Crucially, why? Did a perceived cluster lead you astray? Did you overestimate a streak? Understanding your own past errors is one of the best ways to avoid repeating them. It's about continuous learning. And in situations where the stakes are really high, major business decisions, significant investments, consider using more formal decision support systems or structured red teaming. Decision support systems might be software, analytical models, or even just checklists designed to provide a more objective assessment, less reliant on intuition. Red teaming is where you formally assign someone, or a group, the role of being the devil's advocate. Their specific job is to poke holes in your plan, to challenge your assumptions, to actively look for the flaws and hidden biases in your reasoning about a perceived pattern. It forces a much tougher, more critical evaluation before you commit.
It sounds like technology can be a really powerful ally here, helping us sidestep some of these built-in human flaws. How exactly can tech help us fight the clustering illusion?
Oh, technology is becoming increasingly important in mitigating these biases. Look at algorithmic trading, for example. We mentioned it accounts for a huge chunk of market volume now, something like nearly 90% in some estimates. These are computer programs executing trades based on preset rules and mathematical models. The key thing is they operate without human emotion. They don't get excited by a winning streak or scared by a losing one. They don't see patterns in the intuitive way we do. They just follow the logic programmed into them, which dramatically reduces the impact of human cognitive biases like the clustering illusion.
Right, taking the flawed human intuition out of the loop, essentially, letting the objective code run the show.
Exactly. And beyond just execution, we have advanced analytics. Modern data science tools allow for incredibly sophisticated analysis of vast data sets. We can use rigorous statistical tests to determine if a perceived pattern is actually statistically significant or if it's likely just due to chance. These tools help us separate the true signal from the random noise much more effectively than just eyeballing a chart. We're moving from intuitive pattern spotting to objective, data-driven pattern validation. And looking ahead, machine learning models are playing an increasingly bigger role. These algorithms can sift through enormous amounts of complex data, far more than any human could process. They're designed specifically to identify genuine, often very subtle or nonlinear, patterns or relationships within that data, while simultaneously filtering out the random noise that trips up our human brains. These models are being integrated into everything from trading strategies to scientific research to business forecasting, helping to optimize decisions based on validated patterns rather than illusory clusters or gut feelings. Technology, used wisely, can be a powerful counterweight to our inherent biases.
This has been such a fascinating journey today. We started by defining the clustering illusion, that tricky way our brains see meaningful patterns in pure randomness. We explored its roots deep in our psychology and even our evolutionary history, driven by things like the representativeness heuristic. We saw its real-world power through those compelling stories, the random tragedy of the London bombings, the costly folly at the Monte Carlo Casino, and how it impacts everything from our investments to healthcare to even website design.
And importantly, we talked about how to fight back, how you can sharpen your thinking, starting with just being aware, then actively using critical thinking and basic statistical reasoning, questioning assumptions, checking base rates, remembering things like the law of large numbers and regression to the mean, plus those practical steps, seeking diverse information, talking things through with others, constantly reviewing and learning from feedback, and, where appropriate, leveraging technology like algorithms and advanced analytics. Recognizing this bias and actively working against it really is fundamental for making smarter, more rational choices in your finances, your career, and just how you interpret the world around you every single day.
So when you boil it all down, what does this mean for you, just living your life? The clustering illusion taps into something really deep inside us, doesn't it? This powerful instinct to find order, to make sense of things, even when things are genuinely chaotic. It's how we try to put structure on the unpredictable world. It's why we find meaning in streaks, in coincidences, in things that are maybe just flukes. It gives us that comforting feeling of understanding, maybe even a little bit of control.
But maybe the deepest takeaway, the most perhaps liberating lesson from all of this, is acknowledging that sometimes randomness is just randomness. Beautifully, wonderful, sometimes frustratingly random. There's actually a kind of power, maybe even wisdom, in accepting that. Accepting that not every sequence of events has to mean something profound, that not every blip on the radar is a secret message, that not every apparent cluster is a hidden code waiting to be cracked. True clarity, you could argue, often begins right where that illusion of control, that illusion of a guaranteed pattern, ends. So maybe the next time you spot something that looks like a really compelling pattern, just take a pause, take a breath, and ask yourself, is it possible? Could this just be beautifully, perfectly random